26th webinar, and our efforts for sharing knowledge will continue, which we are doing since last 2 years. Thank you all for joining in our journey and encouraging and motivating us in our knowledge sharing initiative. In spite of the tightening of the legal and regulatory obligation and putting in place a robust corporate governance framework, corporate frauds continue to occur, tarnishing the image of the country and business and simultaneously resulting into serious consequences for stakeholders, employee, investor, creditors, vendors, and society at large. The objective of today's webinar is to examine the nature and perception of corporate frauds in India and their consequences on the business and economic system. Friends, today the key area for discussion in this webinar is type of corporate fraud and governing laws, investigating agency experiencing in investigating corporate frauds, securities fraud, economic fraud, legal consequences, forensic audit, Indian approach to unearth the corporate frauds vis-à-vis global approach, what makes a difference. So these are the topics we will discuss today and deliberate. We are extremely fortunate to have with us a galaxy of very eminent speakers and relevant to this topic. First, I welcome Mr. Rajiv Sharma. He is IPS, has completed 32 years in Indian Police Services, performing multiple roles including UN Civil Police Officer in UN Mission, keynote speaker Interpol Conference on IPR, Additional Director General Police at Police Headquarters. Currently, he heads Rajasthan State Police Academy as director. He has been on deputation of CBI for over 10 years, during which he worked in our Economic Offence Branch, Banking Fraud Division, Special Unit, Special Task Force, and Policy Division. He has planned and supervised investigation into large-scale bank and security frauds, cyber crimes, corruption in allocation of natural resources, and large-scale corruption and welfare schemes. We are indeed grateful to him to accept our invitation and share his experience in spite of his very hectic schedule. I welcome Rajiv Sharma ji for this program. Then we have a very important person, A.Y.V. Krishna. He is an IPS officer of 95 batch. He has held very prestigious posting in Assam and is currently ADGP CID Assam. He joined Economic Offence Wing of CBI in 2004 and later worked on Superintendent of Police, ACV, CBI Hyderabad. He had successfully deported one of the most wanted fugitive, Mr. M. Varadaraj Jullo, the kingpin of Indian bank scam from Dubai. He was the chief investigating officer in the Satyam Scam, which ended in conviction of all the accused. He also worked in DIG Banking and Securities Fraud Cell of CBI and is as a joint director, CBI. He has been decorated with the Indian Police Medal for Meritorious Service and President Police Medal for Distinguished Services. I welcome Mr. Krishna for this program, and your experience of Satyam will definitely helpful to all to understand this concept very clearly. Then I welcome Mr. V.S. Sundaresan, Executive Director, SEBI. He has more than 30 years of experience in SEBI. He is a very distinguished officer of SEBI and has been member of various SEBI and inter-regulatory committee. He has a passion for ordinarily development of securities market and protection of interest of investors, and he has done wonderful job by unearthing various fraud relating to insider trading and the front running, which we will understand from him today. I welcome Sundaresan sir for this program. We have Ms. Sarina PU, has more than 17 years experience of working in SEBI and is currently DGM, Corporate Finance Investigation Department, dealing with investigation of fraud, account manipulation, financial misstatement, and diversion of funds by listed companies. Previously, SEBI Investigation Division was doing the fraud things, but now they have converted a separate division looking after the fraud-related matters of listed companies, and Ms. Sarina is the part of that department. I welcome Madam for this program. We have Mr. Ashwini Taneja. He's a former member of Income Tax Appellate Tribunal, and he has delivered more than 2,000 judgments covering wide variety of issues. Since 2017, he has been practicing as a lawyer with RRA Legal, specializing in PMLA and Benami law. Some of his landmark cases argued by him on point of law has been widely reported. I welcome Ashwini Taneja. He will join shortly. He's traveling and he will take part from this. Then we have Mr. Amit Khemka. He has been practicing as a litigation lawyer in Supreme Court, High Court, and other court of law, and handled large number of cases involving complex issues, some of the which has made headline in the corporate fraud world. Then we have Naval Bajaj. He's a chartered accountant, certified internal auditor, certified information system auditor, and a certified forensic accountant. He is an expert in forensic audit, having more than 15 years experience of working with leading MNCs. He is currently working as a head corporate audit and assurance in Yogaka India Limited. I welcome Naval for this program, and we will definitely get benefited by your experience of how to handle the fraud thing through forensic audit. And everybody will also understand. Welcome. Then we have last speaker, Ravi Prakash, who is an advocate and associate partner at corporate profession, and he will discuss about certain things about the philosophy of the fraud. So before I invite the learned guests to share their hands-on experience, I propose to make a small presentation to take you through the various type of corporate frauds and the governing law, as also the major cases of the fraud. Friends, as you are aware that fraud is a part of greed, and the greed and fear comes together. So today we want to understand that what types of fraud in India which are taking place and in the world, because now it's a global India is a part of the global network. So international fraud also, every day you are getting some call and somebody is asking money, somebody is asking your PIN number, somebody asking something in a different way. So you can understand that it's not a corporate fraud of accounts, finance, banking, security. It's a cyber fraud also, and multiple frauds also. Every day you are finding. So in India, we were saying thug. There was a name Natwarlal who was very popular, and everybody was saying Natwarlal. When we are saying somebody is a fraud, we use him Natwarlal. So, but now every day is new Natwarlal is coming by new tools. So if you see the type of fraud, company law fraud, security fraud, banking fraud, cyber law fraud, bribery and corruption issues, insurance fraud, insolvency, which is a new thing where people are violating law, accounts and financial fraud. These are the few type of frauds are taking place. Now, what are the law governing to them? We have a Companies Act, which is in 2013 Act defined the definition first time that what is fraud, that is 447. Then CARO 2020, it is also talking about various things, fraudulent inducing person to invest money. It is also a specific section. Deceiving depositors, that is also another section. False, incorrect and suppression of information. So they have also included, it is not only false, but something which you are hiding, that is also there. Audit abetting or colluding in fraud. If auditor is joining hands with the promoter or other people. Liability for fraudulent conduct of business, that is also they have given a separate thing. False statement of any return, report, certification, financial statement, prospectus statement, everything they have specified now, and they are put in section 448 and punishable in 447. SEBI, prevention of fraudulent and unfair trading regulation, they have specifically handled these types of fraud, and then insider trading regulation, other than the SEBI Act, which is talking. Then we have income tax law, Indian Penal Code, anti-money laundering law, anti-benami law, cyber law, Coffee Pesa Act. All these things are handling and talking about in different manner. But the most important thing, the most important definition, which is introduced by the Companies Act, and now SFIO is a part of the company and they are doing investigation. If you see this definition of the fraud, it includes everything. And this is one of the widest definition in Indian law, which is covering. So even IPC is also talking about different things. But in this 447, it is a master, or I can say mother of all definition clubbed here. It is talked about the you are doing something, some omission, you are concealing some fact, you are abusing of the position, everything they have covered. And then the important thing is that they are saying you have done something with the intent. The intent includes that there is a wrongful gain or not, it is not important. And then you are doing something wrong to deceive, gain, and injure to interest of the company, number one, shareholder, creditor, any other person. So they have covered everybody. They have covered all intention. They have covered all stakeholders. And the important thing is last point, whether there is a wrongful gain or wrongful loss is there or not. So you have done something, but there's no loss. Even then your action, your intent is sufficient to prove that you have done fraud with that person. So this is one definition which is now part of this. Regulator, SFIO is there, SEBI is there, ED is there, cyber crime division is separate, RBI is doing, and CBI is also doing. So all these regulator which are talking about and they are managing. If we see the major cases of fraud, we have seen Cox and King. Recent cases are there: DHFL fraud, Yes Bank, PMC Bank, ILFS, ICICI Bank, Regulator scam, Shell company fraud, PNB Nirav Modi, the banking fraud, Vijay Malaya banking issue. These are the recent fraud case. And then if you see the security law fraud, then we have seen payment on default or not unauthorized trading, Carvi stockbroking and Modex case. We have seen penny stock and long-term capital gain, then eco-friendly food processing and Esteem Bio. These are few names. Mass insider trading, WhatsApp app leak case where Sundareshan sir handled that he can highlight something. Payment default of NSCL cases. Co-location issue is very prominent today, and NSC matter. Synchronized circular reverse trading cases of Raki trading case, which has SEBI has taken have done the investigation. Price volume rigging cases, the front running by market intermediaries, that is SDFC mutual fund case, GDR fraud case, A1 corporation case, ERA case. So these are the various major fraud cases which has taken place in security market. Friends, the consequences of fraud is not limited to one company and other. Fraud done, it is a loss of the investor's confidence. That is first, because somebody who's losing money, he will not go there. So the investor, because it's a spiral process. If I invest money and I earn money, I will tell others. If my money is safe, I'll tell others. But if I'm losing, I'll tell others, and other people will also go away. It is adverse impacting on the stock market, and that loss of other stakeholders' confidence. So first investor losing confidence, and stock market impacting, then due to stock market, the employee, the stakeholders, the vendors, various people are facing problem. And then it has impacted the capital formation, which is the most important ingredients, because you cannot survive with banking fund. You have to have a capital. Then adverse impact on economy start if capital formation is not taking place. So this is the consequences of fraud, and how this is affecting our country. Loss of public money because crime against public at large, loss over the economy of the nation, weak stock market reflects purely on economy, temptation of fraud increase. If we can, why can't we? This is another part. If somebody has done, why can't I do this? Immediate and long-term environmental damage, which result in significant loss to social cost also. Market do not reach full potential because we are in developing stage, and if the capital formation is not taking place, then we cannot do the developmental work. And then diminishing ethical values, that is the important thing. So this is happening. Now this is my suggestion to regulator, because all regulator are here. We have seen what is happening in India. There is a fraud. We attack the fraudster as well as the company. But we have seen 3 cases: Satyam, ILFS, and Yes Bank, where we have attacked the fraudster, but simultaneously we have saved the company. If we are making the fraud person and the company as a parts and the same, then today Satyam, which is in a different way of Mahindra's company and is growing, cannot take place. ILFS, they have taken over. Yes Bank is now surviving and it will grow. So we can understand the message is, the suggestion is to all regulator, we should save business, attack the fraudster. That is the main aim we should follow. And that way we can save employee, we can save economy, we can save taxes also, we can save company and other position of the company also in this process. So friends, today I have given the indication that what are the things. Now we will listen from our expert and they will tell us. The program structure will be like this. First, Mr. Rajiv Sharma will speak that he will share his experience of his corporate fraud. Then Mr. Krishna will talk about his experience and the specific experience of Satyam. Then Mr. Sundareshan sir will speak about the securities fraud, and that is a securities fraud as a two type. One is a trading fraud and second is a books fraud. So Miss Sarina will talk about the manipulation in the books and manipulation by action. Sundareshan sir will cover. Economic fraud, PMLA, Ashwini Taneja will cover. Legal consequences, and then how to detect the fraud through forensic audit, and then Indian approach to unearth corporate fraud vis-à-vis global approach. What makes a difference, Ravi will cover. So I will request Rajiv Sharma to please take up your experience and your advice to the corporate world that what they should do. Over to you, Rajiv.
Good evening, everyone. Am I audible, Pawan?
Yes, audible.
Corporate fraud seems to be the latest buzzword in recent times. Earlier, it was just a part of discussion in corporate boardrooms or academic circles, but of late, it is now a frequent fodder for investigating agencies as well. And the volume of frauds and the amount involved in these is definitely a cause of concern, because every such fraud creates ripples in the economy and also shatters the dreams of various investors. And at the same time, raises serious doubts about the corporate governance. Though it is not a new phenomena, but the scale is alarming, as we have seen in recent years. Needless to say, a serious discussion like which we are having today is not only warranted to understand the underlying causes, but also to formulate a consolidated response against its future prevalences. The number of incidents reported in recent past and the volume of funds involved indicate that there is a lot to do to plug in the possible loopholes in the regulatory system and also to strengthen the systemic checks and balances within the corporate houses. If we see some of the common threads in these frauds, a pattern that emerges could be the focus of attempted remedial measures. Some of the common threads visible are involvement of board of directors and senior management, poor internal auditing system and ineffective internal checks and controls, fault lines in bank and NBFC practices, absence of effective whistleblower mechanism, complex corporate structures with multiple subsidiaries, centralized decision-making in these corporate houses, overambitious expansion of businesses to non-core areas, and of course, diversion of funds, which is seen very frequently. The investigation of some big ticket frauds in recent past has revealed that modus operandi of most of these frauds is very similar, as many of the crimes reported before the investigating agencies, the tactics which we have seen while committing these frauds are normally use of fake invoices to show false sales or false purchases, over-invoicing of import, round-tripping of funds, false valuation of stocks or non-existing stocks, evergreening of loans with the help of bank officials, overestimation of assets, overestimation of even brand name, related party transactions, payment for services which were not there, and also passing on loans, creation of shell companies, and obstructing information whenever there is an attempt to look into the accounts by deleting computer records or by altering entries. What is most serious of all causes is the gradual crumbling of the institution of corporate governance. And this is, I'm emphasizing on this mainly because of the nature of participants, the profile of participants in today's webinar. Emerging key point is the deliberate deception or misrepresentation, such as in accounting and bookkeeping, cooking up of books of account, unsubstantiated claims, and manipulation of stock prices are such examples. Unfortunately, most of these unethical practices are being employed by senior management, including chief financial officers and their executives. At the same time, whenever there is an investigation in a major scam, that reveals not only the role of the senior management, but also raises serious and crucial questions on the capabilities and capacities of regulatory bodies over the corporate governance mechanisms. So it is noteworthy that many times the corporates try to put the blame on external factors for bank defaults and term it as a business failure. This, of course, remains a gray area, not only for the regulators, but also for the investigators to distinguish between a genuine business failure or a fraud. And of course, it also requires a deeper understanding of business models and business environment. And that is always an attempt by each investigating agency. Before we take up any case, we try to understand the concerned business model and all the factors associated with that business. So based on my experience of some of the cases of this nature, there are several challenges in investigation also for us. And one of the foremost of them is the delay in reporting of such fraud. Of course, the party committing the fraud is not interested, but even the lending agencies are sometimes delaying the reporting of such frauds. And that in that process, the investigating agencies lose a lot of crucial time, especially when it comes to seizure of money, freezing of accounts and the assets. Then there is role of banks and regulators. In case they have been involved actively, so it is seen that there is an attempt by them to delay the detection of the fraud, and then even if it is detected, the registration of the complaint or to initiate the process of investigation. Foreign investigation, as we see in many cases, there is a lot of foreign investigation required, and that of course complicates the whole process. Money laundering, which is a common phenomena, and when it involves foreign shores, the identification of assets, freezing, and their recovery is a much bigger challenge than it appears to us. And then voluminous documents, their scrutiny, forensic audit, and the long drawn trial are other issues which are always cause of concern. Some of the cases investigated in recent past have indicated large scale use of fraudulent documents, setting up of dummy companies abroad. In a case, there were a number of such companies were set up, and they borrowed heavily from various banks for projects which were supposed to be erected or completed in European countries, and none of them ever took off, and money was moved to safer havens and properties purchased in personal names. In another case, deliberate inflation of brand value helped a corporate body to raise bigger loans from various banks. Another example of a newspaper group which projected false and rosy financial pictures and fabricated advertisement revenue and then diverted funds from stated business purposes for personal ventures. My friend Krishna will be dealing with one of the important cases in recent past in detail, and he will be talking to you at length on the nitty-gritties. But before I would like to highlight 2-3 points. The most important point, which I feel is the importance of human factor in any such corporate fraud. When we are seeing there is involvement of top management and the internal auditors, so then obviously it boils down to the fact that the selection of the people by the company, believing that the top management is not involved, then the selection of the people who are manning their internal audit and other key positions. So their examination, their psychological examination, whether what kind of ethics they have, what kind of value system they are following, may be of certain help. Then the internal audit mechanism need to be strengthened in all such cases so that there is a possibility of nipping the problem in the bud, and whenever there are red flags, they can be immediately identified as well as acted upon. And of course, with the last Company Act amendment, the role of independent directors, which has been brought into, I think they can contribute a lot if they play a more proactive role, and they can definitely help prevent many corporate frauds in future. But ultimately, it will all boil down to the will of the management. If they are serious and they are not involved, maybe we will have lesser incidents in future. Otherwise, we are all set for more business and more tasks for the investigating agencies. I hope the deliberations in this seminar will be fruitful for everybody concerned and will come up with some valuable suggestions which can be acted upon in future. Thank you very much, Pawan. Thank you very much, corporate professionals.
Thank you, Rajiv. Thank you very much for giving a wide understanding from that side, which is really an eye-opener, that to do the investigation is not an easy task. You are facing hurdles at each and every moment. I know you have to catch your train also. So before I'm going to Mr. Krishna, I have just one question. As you are aware that you people are from different fields, that question is to you also and Mr. Krishna also. Now, sometimes what is happening, your team which is working, they don't have a knowledge of all these specialized things, like capital, how the money is routing around, valuation of things. So how you are overcoming that particular problem of less knowledge or less professional in your team?
See, I can tell you about CBI for sure that there are always some experts with us. We have a system of having professional from RBI, professional from banks who are there with us, and also we have regular coordination and connect with the SEBI and other agencies where the services of the professional officers is undertaken. And also our officers have also undergone number of forensic audit courses and trainings, and so that some of them are really capable of doing it themselves, and otherwise as and when necessary services of professionals from outside is also taken, which my colleague Krishna will further elaborate.
Okay, thank you very much. So now, Mr. Krishna, that Rajiv has explained the entire area of Now, your experience, how you have done, what are the problems you have faced, and what is the issue which you are finding with the promoters, with the company, because Satyam is one example where top to bottom was involved. Even auditor was also jailed. The promoter is also, the employee is also. So you have the complete net, and independent director also. You have there is some stricture against them also passed. Over to you, Krishna.
Thank you. Thank you for giving me this opportunity. It's indeed a privilege to interact with so many professionals. I also thank my esteemed senior, Sri Rajiv Sharma Sahab. In fact, he has covered the entire gamut of issues from his wide experience, both in CBI and in the state of Rajasthan. So I will mostly focus on the experiences in investigation of Satyam Scam as a case study, so that we can go into specifics as to how and what issues and problems which we faced. And Mr. Pawan Kumar Sahab in his opening presentation has also spoken about 3 companies where corporate frauds have taken place, but the companies survived, though the top management has been prosecuted. And the other question which you just now asked about, how do you handle certain issues which require professional competence and professionals, assistance of professionals, so that also can be covered. So are you able to see my screen?
Yes.
Okay, am I audible?
Yes.
Okay, so now I think we have around about 15 to 20 minutes, so I'll quickly go through, then in case there are 1 or 2 questions I can take. Corporate frauds, the definition of which all of us know. I'll straight go to the Satyam Scam case as a case study. It's a Indian IT services back office accounting firm. It has falsely boosted revenues to the tune of 1.5 billion US dollars. In those days, dollar was about 42 rupees in 2008-9. So it is roughly around 5,400 crores of rupees. The founder was Sri Ramalinga Raju. He was the chairman. Then they have falsified revenues, the margins, the profit margins, the cash balances to the tune of 50 billion Indian rupees, which is about 1.5 billion US dollars as per the then exchange rate. Sri Raju and his brother were charged with criminal breach of trust, conspiracy, cheating and falsification of accounts. And all the accused who have been charge sheeted have been convicted, not only for few charges, but for all the charges on which charge sheets were filed. Now, what's common in a corporate fraud? The general modus operandi in any corporate fraud, whether you take it Enron or the Devu or the large corporate, top 10 corporate frauds which have taken place in the world in the last 3 decades or 2.5 decades, WorldCom, all of them, these are some of the things which are common, which we found even in Satyam. Overstating of profits, concealing debt so that you can borrow more and your books look more rosy, inflate the revenues, increasing the company's stock value by doing manipulation of accounts. You artificially keep the share prices high, allowing the company to borrow more because you are concealing the debt, so your borrowing capacity goes up. Top executives offload their shares during the fraud period. That is, you make hay when the sun shines, because you know one day the bubble may burst. So therefore you offload your shareholding in the company when the share prices are artificially kept high. That's the wrongful gain which Mr. Pawan was talking about. In any corporate fraud, or for that matter any economic offense, you need to calculate the wrongful gain, wrongful loss. So these will be the wrongful gains of the management. Misappropriation and siphon of the company's funds. This may not be common in all the corporate frauds, but yes, it did take place in some of the major corporate frauds in the world. Conning the public, investors and the lenders, all 3 get cheated. the common investor, the retail investor, the institutional investors, then the lenders, that is the banks and financial institutions, as well as the clients. Because of the rosy picture, some of the top-notch companies may come up to you for their services and not knowing the accounting fraud. And in all, I would again underline, in all the corporate frauds, there is a clear-cut nexus between the CEO, CFO, and the auditor. The chief executive officer, that is the MD or the chairman, and the CEO who runs the day-to-day show. The chief financial officer, the CFO, who is also an auditor by profession, the chartered accountant by profession. Then the auditors, that is the statutory as well as the internal auditors. There may be small-time frauds which have taken place for a very short period where role of one or two of these three may not be there. But if a fraud has taken place over a period of time, and if it has been perpetrated in large quantities, then definitely there has to be a nexus between the three, because one can't do away without the scrutiny of the other two. So unless some amount of understanding comes up between the three, it would be difficult for the fraud to be perpetrated over a period of time. Then misuse of the brand value. Some big names use the brand value. Say, for example, if Satyam goes to any bank for a loan, they will not be looking deeply into the books of accounts, but because of the brand name, they would be more than keen to come forward and offer their financial assistance. Now, in a corporate fraud, from an investigator's perspective, what do we look at? Where do we start? How do we investigate? Check the bank balances first. The books might have been manipulated and published. The audit reports might have been manipulated, but the bank where the account is, the current account is there, or the bank where the deposits are there will tell you the correct picture. To start with, checking the actual bank balances and deposits. This is not only applicable to an investigator who does investigation as a postmortem, but this will also be applicable even to the auditors, both the internal and statutory. Am I audible? Hello?
Yes, you are audible.
Yeah, thank you. So therefore, for any auditor or an investigator or who is doing forensic audit post a fraud, one has to start with the bank balances and deposits. Then verify the debtors. Debtors are the people who have procured a good or a product or a service from the company, and they are yet to repay the invoice value. Either they have partly repaid or they are yet to repay, and there is a cushion time between raising of the invoice and actual realization of the money into the current account. So during that period, these people are in the bracket of debtors. So whenever there is a manipulation, there is an inflation in the quantum of money which a client owes, or there are certain additional entries in the debtor list. So therefore, one has to verify the actual money which the debtor owes the company, whether he owes it at all or not. Sometimes they repeat the same client who has actually paid the invoice last year and doesn't owe any money this year, but his name is still reflected in the debtor list. Then check the sales figures. The central finance department, which is interacting with the auditors, might have manipulated, but individual sales teams will have the actual figures of the actual sale of products or the consultancy fee which they have worked for, which is the billable commodity. So the sales figures will have to be verified from individual sales teams. Then compare the bank statements. When I'm talking about comparing the bank statements, it is the actual bank statement obtained from the bank where the current account is maintained, and the bank statement maintained by the finance department of the accused company. Then role of the auditors. This is a very thin line which separates an auditor's role from professional misconduct or negligence on one side and connivance or being part of the conspiracy on the other side. So this is a very tricky and gray area where investigation has to be done in depth in order to see whether an auditor has actually connived with or has merely been also cheated. Because most of the auditors during investigation in various other cases apart from Satyam have come to say that it is the finance department which provided the facts and figures and the books. So therefore, there is no way for us to independently verify certain things. Of course, there are certain audit and accounting standards which they are supposed to follow, prescribed by ICAI and other professional statutory bodies. But still, they are sometimes themselves cheated by the management by way of giving false books of accounts, etc. Now, holding pattern of the promoters and the CFO. This is another area which has to be seen. In fact, before Satyam, the stock holding pattern of the promoters, if they have pledged the shares and have taken loans against the shares, they were not informing the SEBI and the electronic stock exchanges. Whereas after Satyam, when the Companies Act got amended in the year 2013 by the Ministry of Corporate Affairs, after an expert committee was instituted to go into the modifications and amendments that are required, they have now said that even pledged shares need to be informed to the market so that the public will know the actual shareholding pattern of the promoters. Then wrongful gains and losses in any economic offense, be it a corporate fraud or a bank fraud, it is very essential to calculate the wrongful gains and who all gained and where is the money, who is the end beneficiary of the money, and in which form the money has been converted into, whether bullion or real estate or shares or investments in other sister companies, etc. And the losses, who suffered losses and by how much the retail investors have lost, how much the corporate the institutional investors have lost, how much the mutual fund entities have lost, etc. And it's not necessary that the wrongful gains and wrongful losses need to be equal, especially in a corporate fraud. If the shareholding pattern of the management is only 30% of the entire stocks, then the quantum of wrongful gain may be much less than the quantum of wrongful loss, because 70% of the investors have suffered losses because of the sudden fall in the share prices, and the market capitalization of the company has suddenly gone down, skyrocketed down. So therefore, the wrongful gain and wrongful loss need not be equal, like in a bank fraud where somebody has borrowed 1,000 crores and refused to repay. So the bank loses 1,000 crores plus interest and the borrower gains 1,000 crores plus interest. So in a corporate fraud, they need not be equal. Then trail the funds. Where is the money? The frauded amount or the wrongful gains. For this, the investigator may be able to do it on his own if it is a simple flow of funds and transactions. Otherwise, he may need a assistance of a forensic auditor who will be able to assist. Then recast the accounts, because the market wants what is the final balance sheet, what is the final current account balance, what is the final fixed deposits, what is the final profit and loss, what is the revenue that has been earned. Based on that, the market will decide the share price. For example, Satyam, the share price was around 490 rupees on an average before the scam broke. And it, at some point of time, it has even crossed 500 rupees. But once the scam broke, it fell down to 37 rupees. And then after Tech Mahindra has taken over, and once things stabilized and once the investigations are over, the share prices settled down at 120 rupees or so. So that's the actual share price of the company. So that was possible because the market by then came to know the actual books of accounts which were recasted. So only then the market will be able to decide on the actual share price of the company. Now, let's go into the Satyam scam. So far, what I said was something common to various corporate frauds. Now, going straight into Satyam scam, it's a company incorporated in 1987, and Satyam Computer Services Limited has become a listed company in the year 1991. They had 53,000 employees, 185 Fortune 500 companies were its customers worldwide. It had 66 operations in 66 countries, one of the top 4 IT firms along with Infosys, Wipro and TCS, one Golden Peacock for corporate governance the previous year before the scam broke, and in 2007, E&Y Entrepreneurship Award was also given to the top management. And in fact, the internal auditor was also adjudged as one of the best internal auditors of the corporate world in the country. And it has been listed in the New York Stock Exchange, and clients like General Electric and Nestle were there. In fact, the fact that it was also listed in New York Stock Exchange has actually gone against it when the scam broke. And that was one of the main reasons why the scam has come to light. Because when Satyam board has agreed upon Satyam taking over Mitas, which is a real estate company owned by the sons of the chairman of the Satyam company, the New York Stock Exchange was still trading. The board meeting took place in the evening at around 6 p.m. in India, and the board approved taking over of Mitas. But at 10:30 p.m., when the New York Stock Exchange opened the same night, there was hue and cry, and there was allegation that the left pocket is paying money into the right pocket. So therefore, the share prices fell down. And then the investor calls came, the margin money calls, because shares were pledged. And then they had no more shares to pledge or money to repay back, and the scam came to light. So that's one of the reasons getting listed on New York Stock Exchange was one of the reasons for the scam getting broken on the same night. Now, if you see the published margins for Satyam for the last 10 years before the scam broke from 1999 till 2009, January 7th, 2009 was the date on which the scam has come to light, and case was registered on 9th January 2009. So if you see, Satyam has constantly shown a growth operating margin of more than 20% and an average around 23% if you see in the last 10 years, which is on par with all the other IT majors like Infosys, Wipro and TCS. This is what they have published. These are not the actual results. Now, the accounting was done both as per Indian GAAP and US GAAP, because they were listed not only in Indian stock exchanges but also in New York Stock Exchange. So there was a 2-stage audit, both as per Indian GAAP and US GAAP. Then the street expectations were met, and the auditors were none other than the Pricewaterhouse. It's Bangalore, actually, the firm which actually audited. Now, what is the scam about? The average performance during the last 6 years of various IT majors in the country was about 25% to 30% growth. But Satyam was actually growing only at 15%. The shortfall of 10% was faked in the form of manipulating the books of accounts, inflating the revenues, inflating the cash balances, inflating the fixed deposits, etc. The shortfall was achieved by inflating the sales and fudging the balance sheet. This is the crux of the Satyam scam, which is basically an accounting fraud. Now, what was the modus operandi? They were inflating the revenues to match with the performance of other IT majors like Infosys, TCS, and Wipro. The results inflated kept the share prices artificially high, and the top management has either offloaded or pledged the shares during this fraud period to make maximum gains. There was some amount of diversion, misappropriation in the very beginning and the initial years. Now, how did they do the fraud? Inflated the revenues. Inflating the revenue doesn't just mean that you add a zero to the right. You will have to start from generating false invoices. And these invoices were raised in the name of certain false and fake customers who were non-existent or who were not existent during that period. They might have been old customers. Once you inflate the invoices, then you'll have to inflate the bank statements to show the revenue that has been realized. So the bank statements maintained in the company were also inflated by adding additional credits. Once the bank statements were inflated, the current account balances have gone out of proportion. Since the current accounts don't generate any interest, there was immense pressure from the investors as to why the money is being idling in the current accounts. So in order to pacify the investors, they said we will put them in fixed deposit, which will generate an interest in those days of 9 to 10% of fixed deposit interest annually. So they converted the non-existing revenues into non-existing fixed deposits. Once you generate a non-existing fixed deposit, you will have to generate a non-existing fixed deposit receipt. So it started with one and went on and on and on to go on and manipulate false and fabricated documents. And there were no hard copies in the Satyam. All were in the soft form except the fixed deposit receipts which were forged. All the data, the accounts, everything were in Oracle Financials and IMS, which is a RDBMS package, and all the data was on computers and servers. So we had to take backups on hard disks, use forensic examination and computer forensic experts to analyze them. The network logs and the machine logs and the user logs had to be identified as to see as to who has entered the fake invoice and who has entered the fake credit into the bank statement maintained in the finance department. So this was the flowchart of the invoice management system. So this IMS, which is an IT system, had an option of being Excel ported an invoice by directly entering into the IMS, bypassing the previous IT systems in the chain. So before the audit, the statutory auditors were supposed to have conducted the systems IT control audit. So the IT control audit team has clearly brought out and pointed the several loopholes and drawbacks in the system controls. And they have said that unless these loopholes are plugged, reliance cannot be based on these systems or the data in these systems. In spite of that, the statutory auditors went ahead, relied upon the data from these systems, and has also presented to the audit committee consisting of the independent directors that the system control audit is satisfactory. So which was part of the conspiracy. Now they have generated n number of invoices which are false and fabricated, and in order to hide these invoices, after generating them, they were being hidden from being seen by various teams within the company so that nobody will question the genuineness of the invoice, nor will they know about the existence of such invoice. Then we had to confirm that these invoices are fake, for which we had to talk to the finance in charges of various teams. Then we had to talk to the employees. We had to talk to the banks. We had to talk to the customers, record their statements, collect the evidences, and finally decide that these invoices are false and fabricated. A total of 7,561 fake invoices worth 5,117 crores were unearthed. And this was done over a period of 6 years from the year 2004 till 2009. Then this was the inflation. Every year it started with about 200 crores and it went on up to around 2,300 crores in the year 2008-9. That means every quarter there was an inflation of about 600 crores, which was almost more than 1/3 of the turnover of the company. Now, these are the actual figures. Though the published margins were more than 22 to 23%, the actual margins were in single digits and sometimes in negative as the scam progressed. Now, they have forged the fixed deposit receipts by scanning them and manipulating the amounts on them, converting the 5 lakh fixed deposit receipt into a 5 crore fixed deposit receipt. And in order to not to feel the thickness, they were also laminated and kept in the record so that you don't know whether it is a genuine one or not. Then several letters were written to various banks to renew the fixed deposits when no such cash balance was actually there in the current account. These letters were generated for the purpose of record without actually being dispatched to the banks concerned. Similarly, confirmation letters as if the banks have written to the auditors that these are the bank balances, these are the fixed deposits, etc. These were also forged and fabricated. So finally, they have come up with non-existing fixed deposits, non-existing cash balances, non-existent interest on fixed deposits. In fact, they have put up an additional liability on the company of paying tax on interest, which was actually non-existing on the non-existing fixed deposits. Because in the books, they have shown various fixed deposits. They had to show the interest on them. and the interest of fixed deposits is taxable, so they were also paying tax on that. So these are the actual cash balances of actual fixed deposits were about 9 crores, whereas they have shown 3,319 crores as the fixed deposits. So there is an inflation of 3,300 crores. Similarly, the cash balances was 129 crore, whereas they have shown it as 1,800 crores. So an inflation of 1,700. Then the interest was actually 7 lakhs. They have shown an interest on fixed deposit receipts of fixed deposit term deposits of 375 crores. So on the whole, there was an inflation of about 5,400 crores. And coming to the auditors, if Wipro and Infosys, who were more than double the turnover of the Satyam, were being paid to the tune of 90 lakhs, 55 lakhs, these auditors were paid 3.67 crores. Then who suffered the losses? The institutional investors, the mutual fund investors, and the individual shareholders. This is the shareholding pattern. On an average, it was 490 when the things were rosy, but when the scam broke, it fell down to 37 rupees. And after the taking over, it has stabilized around 110, 120 rupees before it got the company Mahindra Satyam got merged with Tech Mahindra. Now, these are the regulatory bodies who are monitoring the company's performance: the statutory auditors, the audit committee, the board of directors, and other regulators like the SEBI, RBI, the bank where the foreign receipts are received, etc. And finally, the shareholders were the ones who have suffered the losses. So a multidisciplinary team has been formed. In the questionnaire, I have seen somebody from an who worked with SFIO has raised a question that it has to be a joint team effort of SFIO, ED, SEBI, etc. It's very true. A multidisciplinary team of 16 officers was formed with members from ED, SFIO, SEBI, IT, and RBI. In fact, I should say that this is one of the best examples of a multidisciplinary approach in investigation. And we also co-opted auditors, cost accountants, bankers, and computer forensic experts into the team. ICAI has nominated 5 cost accountants and 5 chartered accountants who are empaneled and who are locally located and who are independent, nothing to do with the company or the scam. And they have assisted us day in and day out during the investigation. And these are the 10 accused who have been charge sheeted, and all of them have been given the maximum sentence of 7 years and convicted on various counts and for various offenses. They are the chairman, managing director, the CFO, both the statutory auditors, the senior vice president finance, senior manager finance, assistant manager finance, and the internal auditor. In fact, the 4 chartered accountants here, A3, A4, A5, and A10, were also awarded life ban by the ICAI disciplinary committee based on a complaint lodged by the CBI after completion of investigation. And in fact, after post-independence, one of the stringent punishments awarded by ICAI was to the auditors of Satyam. Then it's not only CBI, the Income Tax Enforcement Directorate, SEBI, SFIO have also parallelly and collectively, in coordination with the multidisciplinary investigation team, completed investigations under Income Tax Act, PMLA, SEBI Act, and Companies Act, and all of them have filed charge sheets. And the accused have been convicted not only in CBI case for IPC offenses, they have also been convicted in the income tax case, SEBI and SFIO cases. The independent directors have been convicted in the SFIO case under Companies Act. The Enforcement Directorate case is still under trial. Then, as Mr. Pavan Kumar has initially said, Satyam has not been named as an accused in the charge sheet by CBI. CBI concluded that Satyam is a victim of the fraud. The company, its market capitalization fell down, its share prices fell down. Some of the senior IT experts have left the company to other greener pastures. Some of the big clients have also left the company after the fraud. Therefore, we said Satyam has, as a company, has been a victim, and we have not made it an accused. And Therefore, the stand of CBI has been upheld by various central agencies in their affidavits, and the Honorable High Court has agreed with the findings of the CBI and exonerated the company from the complaint lodged by ED under PMLA. So the company survived. In fact, in the top 10 corporate frauds in the world, whether it is Enron or WorldCom or any other company where the fraud has taken place in the last 20-25 years, in the top 10, Satyam is the only company which has survived as a company, though the management got convicted. So after the scam, the Companies Act has been amended, more liabilities on auditors and independent directors, greater awareness levels for the auditors and the independent directors, strengthened some of the internal controls, incentives for critical exposures, increased oversight by the audit committee has been done. So this is what I thought I will cover in the 15-20 minutes given to me, and I can take any questions in the end or as of now.
Thank you very much. Thank you very much, Mr. Krishna. You have given, you have reminded all the things in a very different manner. And if I'm seeing your slides, so I can realize that the false invoice was the main culprit, and IMS system Excel porting was the main culprit in the entire system. Thank you very much. It is really because we have heard, we have seen, we have read in the newspaper, but today when we were listening from your side, who has done this, so we can understand it is not a slide which was speaking, it is you and slide is speaking and giving the complete live picture before all of us. Thank you very much. Thank you. I'll ask questions. So before this, because what you have sent, you have covered the accounts fraud, security fraud, other fraud. But now the security fraud, which is a part of Satyam also, but so many companies are also doing in a different manner. So I will request Mr. Sundaresan sir to tell us about what types of securities fraud are taking place, and what Mr. Krishna has left, you can take up and cover in their security fraud matter. Over to you, sir.
Good evening to Mr. Pawan and the team of corporate professionals. Am I audible?
Yes, sir. Yes, sir.
Okay. I think the earlier speakers have definitely spoken so much about the corporate fraud and also brought out the case study, which clearly shows what type of, the magnitude of the fraud and also the efforts needed by multiple agencies to unearth such a kind of, the fraud or scam, whatever you call. So the one side of the story is that Mr. Pawan showed in his the presentation that there are numerous laws to address the concerns. My statement to the reply to that is that unfortunately we have too many laws, but the enforcement is not as effective as it should be. Because of that, people even today think that they can commit a type of fraud and then get away by that. So the efforts put in by the, the SEBI or any other regulator should be towards unearthing such frauds quicker and ensure that the judicial process helps us to complete the, enforcement, whether it is a levy of monetary penalty or non-monetary penalty. So having said that, let me, speak about the types of fraud which we deal with. As Mr. Pawan said in his, inaugural address, that, SEBI deals with basically two types of securities fraud. One is where trade is involved in the stock exchange. Out of which people make illegal profits. The second aspect is similar to Satyam, where manipulation of books is concerned. There the fraud is committed over a period of time. Then, based on the fraud which has been committed over a period of time, the people come to the stock market and then trade based on that information and then either make money or get away by exiting the company. So the second part is concerned, as Mr. Pawan pointed out, there is a separate department which has been formed in SEBI to look into that type of financial statement based fraud. so that my colleague will speak. I will restrict myself to the trade-based and the information-based fraud which takes place in the securities market. Trade-based is basically, the manipulation in the price, which has substantially come down now. What we see definitely in the last 4 or 5 years is that the penny stock manipulation or trying to pump the price of some scrip and then dump it at a later point of time. Such type of frauds have, predominantly or significantly, which has come down based on the data we have, based on the, the surveillance measures we have taken. So just to, touch upon that point, in the last few years, SEBI has put in place a lot of surveillance measures to deal with this type of problem. By virtue of that, what SEBI has done is basically the cost of manipulation has gone up substantially. So because of that, cost of manipulation is very high. People are generally not inclined to do such type of fraud. And whatever number, whatever statistics we have and which we publish in our annual report clearly indicate that the manipulation aspect has substantially come down. Now, does that mean that people have become straight or people have become good? The answer is partly no and significantly no. What people have done is they have moved to another type of fraud, which we call it as based on information resulting in trading in the system. This information-based fraud can be, broadly categorized into 2 types of fraud. One is front-running, the other one is insider trading. So the people who are finding it difficult to do manipulation, what they are trying to do is basically, do front-running, which means that when a big order is likely to be placed by a very big client, say somebody wants to buy 1 lakh shares of Infosys, then the person who comes to know that this type of order is likely to be placed, before that order is placed on the system, the person who gains the knowledge of that impending order buys the shares, and then when the actual big client order is placed to buy, the person who has already purchased the shares sells the shares to that person, and he manages that by either putting a limit order or by certain algo, he tries to match his transaction with that person. In the process, he basically makes a quick buck. So this is, we all know that, SEBI is already investigating a case which is being reported in the media, that where a very big client, very big, investor was passing on the information to the some people, and some people have reportedly traded on that, and the investigation is on. The media is already full of that. So in these type of cases, the important aspect is there is a person who actually trades on the stock exchange, and the person who actually possesses the information, because this information is the basically the important aspect. Whoever has this information, if he misuses that information, then it becomes a fraud. Both it is the same in the case of front running, it is the same in the case of insider trading. So the challenge in this fraud system is that we all know how these things happen. Somebody has a as a information, we passes on to somebody, and somebody trades on that. So that there is a tippy concept here. The person who has the information gives the tip to the person who wants to trade. Now, due to constraint of time, I will not show any case or something. The cases are already, whatever other SEBI has passed, is all on the SEBI website. What are the challenges we face as a regulator now? And then what we try to do so that we overcome the challenges. The first aspect is, what is the modus used to communicate the price sensitive information between the tipper and the tippee? That is becoming a challenge. Because of this technological advancement, people are using a lot of encrypted modes, whether it is WhatsApp, whether it is Telegram, whether it is Instagram, whether it is FaceTime. There are n number of medium of communication which is being used to communicate or pass on this price sensitive information. So the challenge for the regulator is basically to find out how the communication has been passed on between the tipper and the tippee. Now, unfortunately, I mean, I'm sorry to quote this, the judicial system looks these things in a very, very, public interest or a private right. That type of angle is being used because when we, based on preponderance of probability, if we charge somebody telling that X has traded in the script, in all probability based on the information he received from Y. The challenge before the court of law is the court expects the regulator to show how X communicated to Y. Now, as I said, the communication could be through multiple channels. Now, to ensure that we overcome that type of challenge, what SEBI has started doing is we have started going for search and seizure, and we are trying to, obtain the digital gadgets of the people who are suspected to have engaged in such type of fraud. Then we are decrypting whatever data available from there, and then we are trying to catch up. One of the cases which Mr. Pawan showed while in the inaugural session was about the WhatsApp case. Now, in that case, SEBI actually lost that case mainly because the court expects SEBI to show it is not enough if the sharing of message is shown. Who is the originator of the message has to be shown. Suppose if there is a group, in the group, the messages are getting shared. Now we have to get into who is the administrator of the group, who has been posting the message. If there are multiple administrators who posted the message, so all these things we are expected to know. And how do we know as a regulator? We go for search and seizure. We get those, digital gadgets. We go for engaging the forensic auditors or the forensic experts to decrypt those messages, and we build evidence on that. As you know, in the last 6 months, we have already done 4 or 5 search and seizures. Some of them have already been reported in the newspaper. Some are details available on the SEBI website as well as in the press release we have issued. So the point I'm trying to say is we are overcoming the challenges posed by this technological advancement is to keep abreast of the developments. We use multiple softwares, how to, decrypt all the digital devices which we are bringing because of the search and seizure. And then what we are trying to do is getting the actual bottom of the case, going to the bottom of the case where this communication has happened. So this is one set of, collecting evidence to establish the communication, because once the communication is established, it is not difficult to say that this person has traded in a particular script based on this information. Now, this is actually post-mortem. That is after the event is over. The second challenge for SEBI is to ensure that these things in the first instance do not take place. Prevention is better than cure. We all know that. Therefore, what SEBI has done is, first of all, we have ensured that disclosure has to be made at the appropriate time. Recently, you might have seen one of the orders passed by SEBI regarding, second, media reports appeared, but clarification was not provided whether the information is true or not. So SEBI has penalized. So we are insisting on the appropriate disclosure at the right time, because we are all living in the disclosure-based regime. Once a disclosure is made, it is for the public to know, and once the public knows, it is for them to take a call whether to trade or not. The second aspect is that we have also put in place a system called structured digital database. What we have expected the listed companies to do is, the moment a material information which is likely to have impact on the price of the script, that details of the information need to be entered into a database by the compliance officer or any authorized person, and he is expected to maintain certain details about that information. That is, from where the information is originating, who are all the people who are coming to know of that information, at what point of time, because at one point of time, all will not be knowing the information. You know, the MD may come to know on one day, the CFO may come to know after 3 days. Like that, whenever the information is passed on to other person, all the details have to be recorded in that. This will help at any point of time to know at what point of time the price sensitive information was born, at what point of time it has been shared among many people. So this is another way to ensure that communication do not get passed on to unknown people. The third aspect is we have also ensured that the disclosures which are made by the designated persons are being automated. The moment a transaction is done on the stock exchange or off market, both beyond the limits prescribed in the regulatory framework, the system automatically captures those transactions and makes it public. It is similar to our income tax return. The moment you go for filing the return, you open your PAN number and you choose the what you call the ITR 1 or ITR 2 or ITR 3, whatever you want. Pre-filled information is coming. Similar to that, the disclosures have already been automated, and therefore the moment the disclosure is coming, we will be able to know whether this person has traded. If so, what is the basis and other things. Now, as I said, all these things are preventive measures. Despite that, front running and insider trading continue to take place because it is human greed. As long as ethical values are not improving, they are actually, unfortunately, the way things are happening, the education, the governance standards, these things are not up to the mark. And because of that, ethical standards are coming down, and human greed is definitely forcing people to try to earn money at a faster rate than what is expected in a normal course. So which forces them to engage in such type of things. So our goal is to ensure that such people are being caught and punished at the right time. Now, in addition to that, SEBI has also strengthened the whistleblower mechanism. If you see the SEBI, insider trading regulatory framework, we have recently increased the award payment also substantially, so that if any person is coming to know of that, insider trading is taking place in any particular company, he is expected to give information to SEBI, and it will be treated with the utmost confidence, and that person's name will never be disclosed till the case reaches the final stage. And after that, SEBI will reward that person with the monetary benefit. So this mechanism has been put in place 2-3 years back, but unfortunately, till today, not a single good case has been referred to SEBI. So that means it is not that, but everybody simply says that front running is taking place, insider trading is taking place. But unfortunately, nobody is coming forward to make use of these systems to strengthen the regulator's hands. Simply making a hue and cry will not help. You have to come, you have to make use of the facilities provided to and facilitate the regulator with the proper complaint, proper mechanism, and SEBI will be in a position to take appropriate action. So this is what, and of course, whatever cases we have done, the orders are available on the SEBI website. We are also using a lot of artificial intelligence and machine learning. We have been using multiple softwares to analyze call data records, bank statements, and that is why if you see in the last 2 years, 3 years, the cases which have not taken more than 1 year to do, that is because we have gone for substantial automation, and these automation efforts are definitely helping us to track the cases faster than what it was taking earlier. So we are also keeping track with the technological advancement and trying to reduce the timeline. But the last point I would like to say is, howsoever we try, the judicial process has to support the system, because we have to go for securities frauds to prove the cases based on preponderance of probability. But if the courts are insisting that we need to have a substantial evidence to prove, then it will be a very, very challenge. Nowhere in the world securities fraud can be established with substantial evidence. Of course, when we are going for criminal action or a prosecution purpose, definitely the punishment is imprisonment. Therefore, we need to go for what you call it's what you call reasonable evidence should be there. But for the purpose of levying penalty, for the purpose of civil purposes, preponderance of probability should be relied upon. And if the judicial process helps us to a substantial extent, many cases can be proved, and this will send a right signal to the market that people who are on the borderline, they will not indulge in such type of transactions. Anyhow, I once again thank Mr. Pawan and the team of corporate professionals for organizing this type of programs and inviting people like us to share our thoughts. Thank you very much.
Thank you very much, sir. Thank you. Always, you are giving a different dimension, and the way you have handled the cases, the way you have given a report and the investigation report, it's a not only investigation report, it's a book which you can read and understand how the people are manipulating. Thank you very much, sir. Now, you have covered the trade, but all these trade has another aspects of manipulation of books. That's why SEBI has realized that this is the very important factor, and investigation of listed companies fraud should be separately handled. So I'll request Ms. Sarina, please tell us about this particular department, how you are doing, and what message you want to give to the corporate world. Over to you, Ms. Sarina.
Good evening, all. I hope I'm audible.
Yes.
Is the screen visible? Hello?
Yes, it's visible. Carry on.
Because there were a lot of slides which I have made, but I see that a lot of topics have been covered previously, so I'm skipping those slides. So basically, everybody.
We will share this presentation to the public later on. Okay. So.
Okay. So all of us know the background cases, like Satyam, it has been spoken about in depth. Reebok case, Enron case, WorldCom case, where a lot of money was involved and a lot of key accounting areas were involved. So I'm not getting into it. And Pawan sir has already covered the fraud definition. So I'll just go to what SEBI FUTP regulations talk about. It talks about fraud, which includes any act, expression, omission, or concealment committed, whether in a deceitful manner or not, by a person or by any other person with his connivance, or by his agent while dealing in securities, in order to induce another person or his agent to deal in securities, whether or not there is any wrongful gain or avoidance of any loss, and also shall include misrepresentation, suggestion which is not true, active concealment, etc., as it can be evident from the regulation. Now, as Pawan sir said, the fraud definition in Companies Act is a very wide definition, while when it comes to FUTP regulations, there is a word which says dealing in securities in order to induce. So the dealing in securities becomes important, and that is why when we look at the fraud angle as far as misrepresentation of financial statements or diversion is concerned, we need to deal with that particular dealing in securities also. Now, dealing in securities, it's an act of buying or selling or subscribing pursuant to any issue of any security, or agreeing to buy and sell or subscribe to any issue of any security, or otherwise transacting in any way in any security by any persons, including as principal, agent, or intermediary, referred to in section 12 of SEBI Act. Such acts which may be knowingly designed to influence the decision of the investors in securities, and any act of providing assistance to carry out the aforementioned acts. Now, if we look at the FUTP regulations, this is an important explanation which has been added, because there has been a lot of discussions which were happening, and by the legal professionals also, and a lot of people telling that is SEBI actually supposed to look at corporate fraud while SEBI is supposed to look at securities fraud. Now the question, if you look at the Vishwanathan committee report, or for that matter, any discussions which has come in, or even lot of SAT orders also, where the court has given, or the appellate authorities has given a direction that yes, SEBI can look into it. In fact, there is a very recent order which says that even in SFIO matter, SAT has given a verdict that yes, SEBI can look into that because SFIO is looking into a different angle and SEBI is looking at the non-compliances of its act and regulations by the companies or the entities. So I'm not getting into the, what you call, all these things have been covered. And as everybody said, there is a triangle psychology behind committing fraud. So I'm not getting into that because it has been already covered. Now, what SEBI does, because of the importance of corporate frauds being increased and misrepresentations and manipulation of accounts happening, subsequent to a lot of cases which has been talked about right now, there lies an importance that yes, as a listed company and as a being a regulator, where these listed companies are there on our stock exchanges, which we regulate, we need to look at the aspects of corporate fraud or misrepresentation of financials, based on which the investors' confidence are being maintained and based on which they are taking a decision. So it becomes all the more important that SEBI look at it. Now, how do we do that? We have had a early warning system in our department, this is a new department, as Pawan sir said, which has been formed in on December 8, 2021, where, separately, we will only look into the misrepresentation of financials, diversion, and the accounting manipulations which have happened in the listed entities. For which what we have started is we have an early warning system where we have assigned 72 parameters, and in the 72 parameters we have given certain weightages, and a score is being there is a score which comes based on the 72 parameters, and then we shortlist the companies based on that, and then subsequent examination is being done. So why early warning system? And when we did a back testing, it was found that in all these entities which has gone wrong, yes, there were some signals which has happened by which we could have identified those companies' misrepresentation or manipulations which has happened. Now, these early warning system is based on certain red flags. What is a red flag? As everybody is aware of, it is a set of circumstances which is very unusual in nature or vary from normal activity. Now, these red flags does not indicate any guilt or innocence, but it just merely provide possible warning signs of fraud. So that helps us in looking into further detail, because it's not possible for us to look at all the listed companies' financials and then take a decision or get into investigation of all the cases. So this becomes very important. It helps to detect potential fraud at an early stage or prevent it. It helps us to identify what requires additional monitoring in order to avoid or detect potential frauds. And it also helps to safeguard the interest of the investors. Now, there are various types of early warning signs, as people know. There can be a change in key managerial personnel or a resignation of an independent director. There can be transactions with shell companies, auditor qualification or resignation of auditor qualifications, unusual related party transactions, frequent fundraising and equity dilution. And it has been talked about the reduction in shareholding, and all those have been already spoken about. Complex corporate structures, consistently increasing debt or low tax payments, inconsistent select financial receivables. So these can be entered into. That's what we have actually done. We have entered financial parameters as well as non-financial parameters to arrive at a score. And as everybody knows, there are a lot of ratios which have been so these all becomes the parameters. Few parameters are there. Now, what we look at is misrepresentation of financial statements. We look at the manipulation of books of accounts. we look at the siphoning of funds by promoters or directors. Now, misrepresentation and manipulation, we take the financial statement analysis, we do the public domain searches, and then forensic audit report wherever necessary. Now, in case of siphoning of funds, we look at the bank statement analysis. Everybody would have been aware of the Fortis order, where investigation that was done by investigation department, which did the fund trail analysis and finally found out that it has gone to the promoter entities. Now, I'm not getting into the, what do you call, in case of auditors, like here, a lot of people have asked, I was looking at the questions also, and the role of auditors in frauds. As Pawan says, it's a very thin line, but I thought like it might be of use to certain people. How do we draw that thin line? So when we call the auditors for statement recording or discussions, meetings for that matter, basically what we ask them is, what was your sampling methods used? Say, for example, if it is, sales has been inflated, what we ask is, what was the sampling method used to find out, to arrive at the audit in case of sales? Then what was the sampling size being done? So what we look at is, if the forensic audit has been done in that, or if it has been done by SEBI, we just try to match it actually. So if the possibility of the instances which we have looked into, looking at the sampling size and sampling method, it cannot be missed by the auditor. So which means that yes, he was aware of the things and there was no chance that his sample would have missed what was there. So that is one way of looking at how the role of auditors are there in these such frauds, whether they were acting in connivance with those entities, promoters, and the so-called directors. We also ask for the working papers. We also ask for what have you done for third-party confirmation, show us the copies of the emails. So that gives us a idea as to how important or what was the role of the auditors in such cases. Recently, what we have also done, what we have also started is that when we look at the shareholding pattern of these such entities, and if there were institutional investors who were there, we call them and we ask them that how did you ask questions? What questions did you ask? Did you ever raise these issues? So that gives an understanding whether they were also acting in connivance with these people, or they were really aware, or whether such questions were there and such discussions have actually happened, to understand how the diversion has taken, or how the manipulation and misrepresentation has taken place. Now, I'm not getting into this thing. Now it's very, as sir said, as everybody said, there has been a coordinated approach between various agencies. So I thought like we will refer, NAFRA had referred one or two cases to us where, we have been doing the investigation, and these, and we have been referring the action against audit, where we have found that yes, there has been a role of auditors in various cases. We have been referring to NAFRA on a continuous basis. So that is an institutional sharing mechanism which is very continuous. And as far as I said, red alert, say for example, I would like to take a case where basically the red alert came because I wouldn't name the case. It came because the entity had just defaulted on an amount of a debenture for a 3.5 crores or around 4 crores. Now, when we looked at the cash balance, there were some 80 crores which was all there. So why should a company default for a 4 crore when there was 80 crores in the cash balance? So that was a real red alert, and we got into it and we found out that yes, there was a huge amount of diversion and misrepresentation happening in the company. And as when we looked at the shareholding pattern, just before this default, the promoters had already diluted their stake. They have pledged all the shares, and then they have come out of that company. So these red alerts actually really help us in understanding whether we should be really looking into such cases, and that really acts as a pointer, and it has really helped when you do the back testing. Yes, we have found out that yes, it has been done. And the various provisions, we charge the various provisions of, as Pawan sir already said that, yeah, it is under PFUTP regulations. And there are relevant provisions of SEBI LODR regulations also, or erstwhile listing agreement if it is beyond that 2015, it is before 2015. And under SEBI Act, this is what we charge them, and the actions are being taken. Enforcement actions are under proceeding section 11(1), 4, 4A, B1 and B2, read with 15 HA of SEBI Act. So that is what SEBI does. Now, there has been a lot of issues in terms of I feel that I take this opportunity to discuss certain points of deliberation, because a lot of times, yes, that coordinated approach as was presented in CBI presentation, there was a coordinated approach in Satyam matter. Yes, that coordinated approach would really help, because there is a jurisdictional overlap between the regulators, who should do what, and whether it's an NBFC, whether it's a, that would actually help us. A coordinated approach would really help in finding out the culprits more early, and then so that the investors are not affected so badly as has happened in the previous instances, or whatever cases what has been happening. I'm not going into the sections, and then I think, yes, as we said, there have been a lot of increased enforcement actions against the financial fraud. Now this department has formed a lot of cases. Everybody knows a lot of cases have been, and the final orders are being awaited. Actually, we have got into a lot of investigation. And as Sundareshan sir said, because of these new technologies being used, it is very difficult to, even from a corporate fraud, it becomes very difficult. And more entities, if the entities are more in foreign countries, it becomes very difficult for us as SEBI. Say, for example, we have seen that lot of revenue, major revenue has been there from foreign entities. Say 80% is there from foreign entities, and it is not being audited. It might have been audited, it might not have been audited. And we have seen instances where there has been no auditing in those foreign entities. So it becomes all the more difficult for us to rely on such figures and find out the details of those transactions when it is foreign. I'm talking it from SEBI perspective. And then we have to refer the matter to Enforcement Directorate for further examination and their end. So that's all from my side. If there are any questions, I would be very happy to answer. Thank you for giving me this opportunity. Thank you.
Thank you very much. Thank you, Sarina Madam. You have given a nice presentation, and it's a presentation which is eye-opening for everybody, that all the corporates should realize this, that there is a CCTV in the shape of your department is there to watch every movement. And the way you have mentioned, that is absolutely right, that if a company's performance is not matching with their financials, then there is something wrong is happening. Okay, either the company got a lottery or company got a something. So SEBI has a right to ask them what is happening in your company, and then you can get the entire information. So thank you very much. I request you share your presentation, so I will share with all the participants. Now, Ashwini sir is joining, but in the meantime, I will request Naval Bajaj to please tell us that what is the status, how the forensic audit can help to detect these types of fraud, and you are the expert in this area. Over to you, Naval.
Hello, am I audible?
Yes, you are.
Okay. So first of all, respected co-panelists, friends in the audience, Mr. Pawan Vijay and corporate professionals, I thank you for this opportunity to share my views in brief. See, I think the fraud has been discussed in detail in terms of its types, and we have also understood what is going around. There are so many good examples shared by my co-panelists. Therefore, I'll focus my deliberation on detection part of it, detection of frauds by forensic audits and the changing trends in the same. And but before I start my deliberation on this, I would like to mention one point that Institute of Chartered Accountants of India became the first body who issued the forensic accounting and investigation standards, full scope forensic accounting and investigation standards, what the professionals need to follow. And they have very consciously given the terms forensic accounting and investigation standards rather than calling it forensic audit. Although forensic audit is a very generic term and used globally. So, but the difference is that the word audit has its own connotations as per different acts, including Companies Act and various other acts where they require an audit to be done. And that is why I think there was a conscious call to call it these things as forensic accounting and investigation rather than calling it forensic audit. So having said that, I'll continue to use the word forensic audit because it is still being used in generic parlance and we are not talking about standards anywhere. Now, friends, as all of the frauds that have been discussed here so far, and most of the co-panelists, respected panelists are from regulatory background, and therefore, they spoke about frauds by the company or by the managements actually, which are against the civil society. And categorically, we can define them into two: either fraud against the company, which will be, say, employee fraud, misappropriation of funds, etc., 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 or the frauds by the company which are intentionally done with the management's coherence, like financial frauds, tax frauds, money laundering, etc., etc. Now the question comes: we have seen so much of it, we keep on reading in the newspapers, but how to detect? And that is where the forensic accounting skills and the investigation skills come into picture. And as all of us are aware that early detection is prevention for later. There are studies, global studies available, which say that as early as we detect a fraud, if we detect a fraud early, the loss made by the organization or by the public at large is comparatively lower as compared to if we have it delayed, because the more the fraud goes on, the cost of it for the society is getting bigger and bigger. So what do we do? I think we have to work on both the sides. We have to work on the prevention side, we have to work on the detection side, and detection in itself becomes a prevention for the long term, because then the fraudsters know that, okay, I'll get caught here. I think I liked the deliberation of earlier speakers where they said that, I think Mr. Sundareshan was mentioning that, okay, now these kind of frauds are not happening and different kind of frauds are happening, but people are not improving, and fraudsters are still being very creative. So I think it's always a cat and mouse game between the auditors or professionals like us and the cheaters or the thieves, right? So but I feel that the most important thing is to identify the red flags early. And how do we do it? Very common practice is to build fraud scenarios. So fraud scenario as compared to any other risk control matrices, as most of the professionals will be aware, they talk about what is the risk, what is the control, and what is the residual risk, and what we are doing about it. But fraud scenarios or fraud risk management is taking a slightly different approach. It talks about, okay, what could go wrong with a clean paper approach? What could go wrong from a perspective of a fraud, intentional fraud, intentional discrepancy? What can go wrong? And then finding out whether we have the safeguards in the system or not. And more or less, for most of the frauds that we have spoken today in this conference so far, I think wherever there is a management override of controls, the controls will not be there because management can override it. And therefore we have to think and we have to find out, based on various ways that how to mitigate this risk. So building fraud scenarios is very important. And then coming to the next point is to motivate for reporting. No, there is a fact that information of all big frauds exists in the system, exists in the organization always. There are some people who are always aware about it. They will be handful, but they don't report. They don't report for various reasons. They could be part of the story, or they could be under threat that, okay, if I report, I'll lose my job, or there could be some other constraints that they have. Or maybe the organization's culture is not such that, you know, they feel comfortable in reporting. The same applies to regulators. Now, I think regulators have, I'll not get into specifics, that they have started giving positive motivation for people to report certain frauds like insider trading. I think SEBI increased the incentive. Similar way, other regulators are also giving incentives. If someone reports a wrongdoing by an organization, they get rewarded financially, and they're also the identity is supposed to be kept secret. But in terms of being comfortable about, you know, or how sure the person can be that my identity will not be, you know, compromised is another question. So what I'm trying to say is we have to build the fraud scenarios to identify the red flags, and we have to motivate people for reporting. I think these are the two ways where we can detect these frauds early. And there, you know, all of us know that there is always a difference between a normal audit and a forensic audit. In a normal audit, we are seeking information from the auditees, audited and finding errors, mostly errors, unintentional errors, right? But in terms of forensic accounting engagements, we are trying to connect the weak dots that are available. So we cannot go in a structured way. We continue to find those dots and then make a map out of it. No one will give you full information. So we need to build our hypothesis and then go about it. In the normal audit, we trust the management, we take their management confirmations, we you know, build our documentation, etc. But in case of, you know, forensic engagement, you can't do that. So what are the tools which are used? And I think Mr. Pavan Vijay asked me to elaborate that a little bit, although some of us may be already aware about it. The usual tools used for a forensic engagement are the ones which will give us evidence which can be acceptable in the court of law. But does it mean that we don't collect other evidence which are not acceptable by the court of law? The answer is no. The answer is that, first of all, we have to crack the modus operandi. I think Mr. Rajiv Sharma, when he was talking, he spoke about it. And Mr. Sundareshan also spoke about it. What is the modus operandi? To find out the modus operandi, there are multiple ways how you collect that information. And first or foremost is the forensic imaging of the electronic equipment or data that is available. So whether it be carved data or uncarved data, in other terms, whether it be deleted data or undeleted data, we need to do an exact image, which we call as forensic image, for which specific softwares are available, to create the same image and then start working on that image rather than, you know, disturbing the original evidence. But my friends, there are bottlenecks. There are bottlenecks on that also. For example, you know, if the data is not in India itself, if the data is on a cloud, which is location is outside India, and then you know, someone can simply block access to that server or those emails or those kind of files which are there on the cloud. I think the recent example in the news was Uber Global. You know, the news has come across various newspapers that they blocked, how they blocked data for the investigators, right? So these kind of risks are always there for forensic accountants. And I personally, I'm of the view that a lot of companies could be seen not compliant with the requirement of our Companies Act, which says that data is has to be available in India also, accounting data I'm talking about. Although the Act says it, but a lot of, especially the companies which have their bases outside, headquartered outside India, may not be complying with that regulation. And I don't think this is being checked also. So specifically, The second tool, after forensic imaging is about indexation of that data, because there is huge data that is available. And then we have to, use the softwares to find out the relevant information, relevant files, relevant emails. How do we do that? There are softwares which are available for indexing of those keywords. You build your hypothesis about a case that you are investigating, and then you use such softwares or tools to index that, and then you find out this relevant information, which you will go through in detail later on. But then again, a limitation about these tools is that they are very, very expensive. And I'm talking about the tools which will be acceptable which do not, there are other tools available who may alter the evidence itself. So they may not be acceptable in court of law. But there are very expensive tools which are available for this indexing. And I think that we need to look at, reducing the cost of it in the long run, so that they become in the reach of many practicing auditors, especially who are not MNCs. Next, is market intelligence, corporate intelligence. I would say a lot of, we were talking about, I think, insider trading, and we were talking about front running and all that. How will you find that out? Yes, the data can give you some idea about, a particular organization, results coming out which are very good, but later on the stock is going down. Why will that happen? Because people have already bought it, because they already know, knew the results, right? So that is just one hypothesis. It may or may not work, but if it happens as a trend, if the parties who are doing this are all the same over a period of time, and if it is happening for a group of companies, then it gives you some kind of information. So we have to move from surveillance to data valence. That is what I would say. We have to identify red flags. We have to identify fraud schemes, and market intelligence is key. And what is market intelligence? Market intelligence is not acceptable in court of law, my friends. Market intelligence is your people are out there in the market and they are finding out how things are working without having any proof about it. They will talk to people, they'll find out information, how things are working, feed it to you, and then you will try to connect those dots within the internal systems, internal documentation, internal information data available with you. But you already know what is the possible modus operandi. So the greatest part about having market intelligence, my friends, and especially I think this is for regulators also, is that you already know where to go or which side to target, because there is a sea of data available. What will you target? Now, another thing I will say very important is a concept of having data-based decisions rather than HIPPO concept. What is HIPPO concept? Highest paid person's view. Normally it used to be, and it continues to be in many organizations, that whatever the most senior guy will say, people will just agree to that in the boardroom. But now with so much of information available, database decisions need to be taken. A lot of times, if database decisions are being taken or not taken in the audit, we can find out whether the justifications for that particular transaction which is under audit, whether it was actually there or not, whether it is being substantiated by data or not, whether the justifications that have been documented are actually correct or not. So we have to make sense out of the information, and we have to basically tell the story rather than, so data should tell the story rather than just giving facts, is what I'm trying to say. And most importantly, now there is a lot of data available on media, social media, websites to check the past and present of the beneficiaries, etc. So all these examples that I'm trying to give are just giving some, because the time is very limited, just giving a synopsis of how forensic accounting and investigation practices can help in detection of frauds and what are the latest trends about it. Over to you.
Well, thank you very much. We will have a separate session on forensic audit because time is short, so that's why we have to cut short. Now, Ashwini, you are dealing PMLA day and night, and you have seen what types of PMLA fraud is taking place. Can you just give us a brief to us that what are the PMLA fraud which are taking place, it will be grateful. Ashwini sir, over to you.
Thank you, Pawan bhai.
I know you're traveling, but we'll take advantage of your knowledge. Yeah, please.
Thank you very much for inviting me here. And thank you all the esteemed participants. In fact, now today fraud has become a global scenario. As we know, this is not any one country's problem. It is not third world problem. It is problem of the any country you take it. And I think it has become in the list of crimes. If you see in a country, it is biggest on the picture because it is hitting all strata of society, bottom to top, in one way or the other. And that is why the government not only first of all strengthened the laws with regard to anti-money laundering, but also simultaneously brought out a very, very effective legislation by way of introducing and strengthening provisions with regard to Section 447 of Companies Act, read with Section 212 bracket 8 of Companies Act. I think on which a lot of deliberations have done on that, and I will not take more time. And also creation of a dedicated agency like serious fraud investigation has given it really further wings, further teeth and wings. So first of all, we need to understand that what kind of impact can be there in the by way of committing a fraud on different sectors of the stakeholders, different kind of stakeholders there, and how it can have any bearing or PMLA or vice versa. So 2-3 things I would like to make a mention that there are 4, 5, 6 kind of category of stakeholders, and I generally call them as SPICE. That is S for shareholder, P for public, I for investors, C for customers, and E for employees. So anything done against the interest of any of these persons, any of these entities, any of these stakeholders of any category will by and large more or less come within the definition of the word fraud. The word fraud has been very vaguely and widely defined, and that is make all the more cumbersome to understand the legal process which is going to take place. The moment knowingly or unknowingly any action is taken by the company or its management or any of the person concerned with it in any manner. So therefore the time has come to be very careful now, particularly for the reason which I will mention, that it has got direct bearing now on PMLA law. And believe me, I mean the consequences, the legal consequences there are unbearable. Though I would admit that the consequences within the Companies Act is also quite harsh, but within the PMLA framework, it becomes very, very difficult. Now we can take some examples by way of which, I mean, the frauds are committed and how it will have, direct bearing on PMLA. Somebody is inflating expenses or deflating income. Some personal expenses of directors are there. Some related party transactions are there through which some diversion of funds takes place. Or in any manner, illegitimate, undue benefits are given to promoters, CFO, company secretary, independent directors, or anybody having influence on the management of the company. So if it happens, now 2 things can happen. First of all, any violation under Section 447 has directly been included under the definition of scheduled offenses within the meaning given of the scheduled offenses in the schedule of PMLA at item number 29, because there are around 29 acts, violation of any one of which can lead to violation of PMLA, can lead to attraction of the laws of PMLA. So this has been specifically brought out. Not only that, even if 447 would not have been there, in committing fraud, there may be committal of certain offenses which can otherwise lead to other offenses also. For example, offenses under IPC, offenses under various other 29 legislations. So somebody was asking me a question, okay, whether violation of tax laws as it is would lead to, attraction of PMLA also. Technically speaking, no, but practically speaking, yes. Because the violation of tax laws has not been mentioned as it is as one of the scheduled offenses, but it may happen that while committing tax evasion, tax, whatever non-compliances, it may happen that there are certain acts committed which may fall within the definition of 447 or violation of IPC or something like that. I can take up many case studies to demonstrate what I am trying to say, that how wide the canvas of the ED has become, the PMLA law has become. So, taking it forward, so little bit of background how PMLA can be attracted and what are the things of PMLA which affects us directly. I will seek to share this PPT of mine, and I will take 5-10 minutes at the most to convey what I am trying to say. So this ORF published a research report recently, wherein it was analyzed that there are 26,134 ways where a businessman can be jailed. So they said it at 26,000 ways where businessman can be jailed. So what 26,000 ways they're saying where an entrepreneur can land in jail for non-compliance of business laws. You must have heard that now there is going to be a coordination of multitask forces have been created for multi-agency scrutiny. So CBI, ED action may now follow IT probes, and you must have also definitely gone into this MOU which has been entered between SEBI and Central Board of Direct Taxes, where they are talking about exchange of information. So MOUs have been entered into by the Income Tax Department with SEBI, with Enforcement Directorate, and with various other allied agencies, so that there could be free flow of information between various such agencies. So coming back to this, what we were discussing. So there is a stronger interplay between the between various laws dealing with economic offenses, and Companies Act and other laws are definitely very intimately interwoven and connected. So today, what I have been requested by Pawanji is to discuss about the interconnection between PMLA and the Section 447, etc. So as I said, 447 has been made one of the scheduled offenses. As I said, scheduled offenses is that list where the various offenses are given, that if offenses are committed, then how and in what manner PMLA can be attracted. So first of all, we need to understand that there are 3 stages by which it can be said that a person has committed a violation of PMLA. Stage number 1 is if a person has committed any of the offenses mentioned in the schedule, that is called a scheduled offense. So he has done a crime, that is one of the crime which is mentioned in schedule. And number 2, he generates some proceeds therefrom. And number 3, then he portrays that proceeds as good money. So illegitimate money is being shown as good money. So how it will happen under this Companies Act, that he has committed a fraud, and committing a fraud, if it is defined as fraud, will be violation of Section 447. And 447 has been specifically mentioned at 29th place in scheduled of this. So in a way, it can be said that he has committed scheduled offense. So any income derived from commission of scheduled offense is called as proceeds of crime. So in a way, he has earned proceeds of crime. That is stage number 2. And stage number 3 is that he is portraying it as good money. So that is called offense of money laundering, that portraying the bad money as good money. And bad money means the money which is derived from any commission of scheduled offense. So in this manner, by commission of 3 stages, it can be said that the person has committed the offense of money laundering, and the consequences of which are again very harsh. Number 1, if any such action is perceived to have been done by the Enforcement Directorate, then it can do survey and search. It can do investigation under Section 50 of PMLA, which is quite harsh, which former UP chairman chairperson is undergoing nowadays. That is before ED. That is a Section 50 investigation only, for which a lot of hue and cry is there in the country. Then, second, arrest can be done. Then last but not the least, so prosecution can be done. Imprisonment is from 3 years to 7 years, and which goes extendable to 10 years. Then last but not the least, whatever proceeds have been derived from commission of scheduled offense, that can be attached and ultimately confiscated. So any property derived from proceeds of crime is liable for attachment under section 5 and confiscation under section 8(8) of the income of the PMLA. Then last but not the least, I mean, during the course of such, whatever property, records or other items are found, they can also be seized, impounded and retained for a longer period by the Enforcement Directorate. So this is one aspect, I mean, where directly PMLA law is attracted. There are other consequences also if fraud is committed. That is consequence of attraction of Benami law. I mean, you would be wondering how, but I mean, the straight case can be if a person is committing fraud, then he would be doing a transaction in disguised manner. And the moment transactions are done in this disguised manner, that such kind of actions may fall within the definition of section 2(9), clause A, clause B, clause C, or clause D, which define Benami transaction. So the moment any such transaction has been done in Benami manner, then all that property can also be attached, and again prosecution is prescribed there also. So I mean, and there could be violation of FEMA also if some, I mean the money has been exchanged through Hawala or something like that. So kindly see one bad action and how many consequences. First of all, consequences under 447 itself of fine and imprisonment, then consequences under PMLA, and then consequences under Benami law also. And in harsh cases, in very serious cases, I mean all this length of imprisonment can be aggregated also. So this is the provision which we are going to face. I think the time which has been given to me in this much time, this much only I would like to share with you. So one thing I would like to share lastly, that somebody was asking me one question. This also, Pawanji, before I wind up, this also I wanted to show. This significant beneficial owner concept also, very little bit, only 1 minute also. So if a company is giving information about the ultimate shareholder, that who is the ultimate beneficial shareholder, it is also possible that this is a hot cake for the people, for the agencies to treat it as Benami. Just this thing to be kept in mind. This I have already explained about the money laundering and all that. So this I will skipping. Stage 1, stage 2, stage 3 I have already explained. Yes, burden of proof. This I wanted to discuss with you. I was looking for the last item under PMLA which I wanted to discuss with you. Now, very strange thing under PMLA, which is proving to be quite harsh, because of which this PMLA law is becoming very, very harsh upon the people, is that here the concept of burden of proof is reverse. Our constitution is based on the principle that a person is innocent unless proved guilty, and the burden to prove that he is guilty is upon the person who is alleging him to be guilty. But here this concept has been compromised. This principle has been breached in a manner that the burden is upon the accused that he has not committed the offense of money laundering. So the moment charge is framed under section 447, the burden will be upon him that he has not committed offense of money laundering in case any pursuits of crime are detected. But the only precaution to be done here is, as I mentioned, there are 3 stages. The reverse burden is there with respect to only 3rd stage. With regards to first stages, that is commission of scheduled offense and earning of pursuits of crime, I mean, this burden is still upon the prosecution, but indeed Enforcement Directorate in some cases has reversed the entire burden of all 3 stages, and that is why this law is becoming to be very, very harsh upon the people who are roped in within the web of this law. So thank you very much for giving me this opportunity. Thank you, Pawan, and thank you everybody, all the esteemed participants.
Thank you very much. Now, because we are overshooting time and we have to take, Ravi, can you just close this by your comment with 2 minutes?
Yes, sir. First of all, very good evening. And I think most of the exposition and the jurisprudence on the topic of frauds have already been given, starting from Rajiv Sharma sir to Sundareshan sir. They have said 2 things are very clear, that the frauds cannot be completely eradicated. Preventive measures can be taken only. I'll straight come to the topic, to the crux of the matter. Generally, the trend shows that due to the legislative exercise and due to the approach of regulators, the companies are finding it tough in their ability to manipulate financial reports. And in response to this, the game has shifted to cooking the decisions, the operating decisions. There is a report of Journal of Accounting and Economics published in USA, which examined 400 senior executives. And the study reveals that managers tend to manipulate results not by how they report performance, but by how they time their operating decisions. And this is why, and I'm quoting the securities regulator here, this is why you would see in last 5-6 years, the thrust is on more disclosure-based regime on those operating decisions that are most susceptible to manipulation in order to determine whether they are being made for sound business reasons or to artificially boost the financial results. That is one. And there are large number of tools, because my topic is to compare the global and Indian approach. There is no such approach. There is either a correct approach or an approach which can be improved. So you would see there is a Benford's law named after the British scientist of 20th century, which gives you a principle-based approach. And that principle is applied to stock market to determine the length of rivers. Everything which has to do with numbers, that principle can be applied. And then there are sophisticated algorithms which are used by some of the regulators. And perhaps SEBI is one of the regulators which has ventured into the innovation on the IT front. And the results show in the quality of their surveillance and the data they gather for launching the investigations. So the moot points are is that between commission of fraud and launch of investigation, one thing which is lacking across many of the regulatory agencies is the continuous monitoring and surveillance. It is not necessary that we generate the number and volume of financial reporting or the disclosures made by corporates. We need to really improve and improvise on the way we analyze and understand these reports or information to turn them meaningful for the purpose. That would be the crux if we want to match the global standards in order to detect and unearth the frauds at an early stage. For example, you see in 2009, SEC implemented XBRL across the board. But in India, you would see it was implemented much later on, and I'm not sure whether it is across the board yet or not. So therefore, these are the measures where we can improve. So that is it, because time is short and we have already over. And although it was a very intriguing and session, which it gave me quite a notes to maintain and to follow. That is it, sir, from my side.
Okay. Thank you, Ravi. Thank you very much. Now time is short, so I will take advantage of Mr. Sundareshan and Sarina Madam and Naval. Sir, some questions people have asked, they are the specific questions that who can do the National Herald case, certain issues. That question we will address separately to them. But I'm asking on the macro view question, because behind every fraud, there's a human greed. There is also fear factor being caught and punished. How come the greed overtake the fear factor, sir?
Sir, please repeat the question.
Sir, behind every fraud is human greed. There is also a fear factor of being caught and punished. How come the greed overtake the fear factor?
See, the inherent attitude of a human being is to crave for more and more. It's a universal. I mean, when the gentleman was explaining about Satyam, I was just got one article which has appeared in Financial Times on July 4th. What Satyam did was repeated in the same fashion by a company called Wirecard in Germany. And this has happened this was discovered in 2020 when the company went for bankruptcy, and subsequently when KPMG was asked to do the auditing, they came to know that prior to 2020, last many years, they were manipulating the accounts in the same way, showing as if the funds are available in the books, but actually the funds were not available at all. So it is nothing but the repeat of Satyam. So what happened in India 2000 prior to 2008 is getting repeated after 15 years in some other country. So it is a human nature, it is a human instinct that try to enrich unduly. And some people have, there are three types of people we call them. Somebody who wants to, the greed, the human greed. The second one is to feel that, doing a wrong gives a lot of satisfaction to some people. We see people who travel in the train or the bus, running on the boarding the bus or running in the train and boarding the train. These type of people have a very peculiar attitude that, they want to show to the normal person that they are something, they are actually abnormal, but they want to show that they are something extraordinary. So when these characters are there, the frauds are bound to be there. People will definitely think that we will not get caught and we will escape from the rule of law.
Okay. Sarina madam, what is your advice to corporate? What checks and balance should be put in place to prevent fraud?
See, when it comes to employee fraud and related frauds, yes, we can say that there can be checks and balances. But when the management themselves are getting into fraud, that is where the SEBI, everybody comes into picture and it becomes very difficult. Like sir said, greed is what plays there. But then now what we see is in a lot of complaints, I think the actions taken by the regulators, say independent directors have started playing a more, responsible role. And we have seen complaints from independent directors in our department. So that's a good sign actually, where they have said, yeah, things are not right in the company. And then we have got into those investigations and actually found certain things. Likewise, the auditors have been doing more increased role. I think when auditors do a more increased role, maybe management have limited avenues to hide things and get into that fraud. And NAFRA taking very stringent action against entities now. Say one entity has been debarred very recently for 1 year and penalty being levied. I think that also has, that Misuse has actually helped in understanding that, yes, people need to be more cautious. But then, yeah, like sir said, you can't help it actually. You can only reduce it. You cannot eliminate things.
Absolutely right. Absolutely right. Okay. Naval, you have done forensic audit. Can you just tell me when forensic audit means something relating to fraud also? So what are the common factor you have identified?
Well, it depends upon the kind of fraud that we are looking at. Most of the times, the abuse of the existing system is the key thing. If you look at the fraudster's profile who get caught, there is a study available globally. What is the fraudster profile? A fraudster is someone who has been in the system, who understands the system very well, who understands the nuances. He is an influencer, he or she, and people trust him. That is how he is able to abuse. I think that is one common thing across any kind of fraud that I would have seen.
Okay. So Nishan sir and Sarina madam, two very important questions, because you are doing investigation day and night. Is it the fraud is done by the promoter? At what stage the company executive roped in the become partner in crime? It is possible that the honest executive is made to succumb to the evil pressure of the bosses. Number one. Sometimes promoters are honest but unscrupulous professional inside them to commit fraud. What is your opinion? How much you are finding that every time both are combined together, or sometimes promoter are good but executive has done something, or sometimes executive is very honest but promoter has fucked up? So what is your view in this? Sarina madam, I think you can give answer.
Actually, in whatever cases we have done till now in this past 2 years, what we have found is there is a very close nexus between all of them. And even independent directors are not independent. The problem is that we have done investigation even in shell matters also, shell companies that list matters also. Either they are classmates, they are college friends, they are relatives actually, but then the problem is that the definition doesn't cover mother's side. So either mother, sister, son. So actually they are related and connected, but not as the related party definitions and definitions under the law. So basically they are abusing those laws. And then so when independent, so they are CFOs, they are CEOs, they are the internal auditors, they are the authorized signatories for diversion of funds. So even if we call them professionals, so-called professionals, actually they are related entities of these management or promoter entities. Majorly, that's what we have seen. Otherwise, they have, in few instances, what we have seen is they are also they have also got a good amount of money in that. So obviously, when we look at the bank statements of their personal accounts, which was not so obviously some way or the other money has come in to them also. So they are party to the they have also reaped benefits out of it. So distinguishing them as professionals and promoters, I think that wouldn't be right.
You have given the answer that it is a connivance of both, and without connivance of both, you can't succeed at also. So thank you very much, friends. Now we have already overshooted the time, but anyway, it was a very nice interaction with all of you, and the way you have given insight, that is excellent. And people have asked questions. Some questions are related to their comments and their specific things, which I think we will give some answers directly, or some questions we will ask you if you can highlight this. Time is short, so I'm not covering these questions. There's a very specific and pertinent questions relating to specific issues. And today we are doing the a index program where we can discuss about the corporate fraud in a larger way. So thank you very much. Thank you, Rajiv Sharma. Thank you, Ashwini. Thank you, Mr. Krishna. Thank you, Naval. Thank you, Sundarshan sir. Sarina madam, Ravi, you have done this. Thank you very much. Our journey will continue, and our next program, which will be on next Friday, we will do, and we will announce the topic. That will be our 97th program. So you can understand we are reaching shortly our 100th program in the month of September. And because of the efforts of all the participants and the speakers, those who are coming, we have completed this journey. So thank you very much. Thank you all.